Hello dear traders, today is Friday, March 11th, and I'm ready to share another market review prepared for InstaForex. What happened in the world of finance? Yesterday, traders responded to ECB policy decision. The key interest rate was put on hold. Christine Lagarde confused things in her statements. She spoke about inflation and stagflation. Importantly, problems in the EU have been snowballing. Europe has not recovered from the COVID crisis yet. Now they have to deal with the fallout from the hostilities in Ukraine. Soaring energy prices are putting a strain on the US economy that is stalling its economic growth. EU GDP is expected to contract by 1 to 1.5% next year. Another important thing is the US inflation report released yesterday. The CPI came in line with expectations. It didn't rock markets and didn't change ongoing trends. Notably, gold doesn't respond to any news. There is only a small pin bar on the 1-hour chart. The price has been drifting downwards. Eventually, my old trading idea for the dollar-yen pair has worked out well. I made this plan on February 24th. Finally, the pair went upwards as expected 3 weeks later. I have done it today. Those who trade on swap-free accounts have earned well. The US stock market halted its fall at least. Oil and gas prices have corrected downwards. Oil is now trading at 108 but not at 130. There are some traces of optimism that propped up the stock market. The European stock market benefits the most from stabilization of gas prices. I still foresee high volatility because fundamentals haven't changed. Now let's discuss everything on charts. Gold created this pin bar during US inflation data yesterday. Let me remind you that gold led the upward targets at 2073. A couple of days ago, all analysts predicted that gold would cost $3,000. Today they are silent. I'm not so ambitious, but the level of 2073 coincides with the double top that might be broken. Today, on Friday, the price is likely to close with a giant weekly pin bar. It is not good for planning long positions. We also saw a pin bar yesterday. Those who trade according to support and resistance can clearly see support at 1970. Those who believe in technical analysis are going to buy gold at this level and set stop losses below. Perhaps they will have good luck, maybe not. Probably the price will go up. There is a high chance that gold will stay at this zone for a while and plunge, activating stop loss orders. I suggest two scenarios. Both of them are about price growth and hitting the double top. Let me warn you about some pitfalls. The US Fed is widely expected to raise the funds rates next week. As inflation didn't beat forecasts, the Fed is likely to increase interest rates by 0.25%, but the regulator might spring a surprise, for example, raising interest rates by 0.5%. Gold will survive a rate hike by 25 basis points, so we could earn 10,000 pips on long positions. Silver has lost its footing. I still believe in the old plan of the rise to $30. If silver goes down, I'm going to buy it to add to my long positions. Platinum and Palladium are also going through a downward correction. By and large, it is nothing but a correction, not a trend reversal, because there is still a global deficit of these precious metals. The euro-dollar pair. The euro-dollar pair generated an inner bar yesterday. This bar is being broken today. The ECB didn't raise interest rates. Lagarde baffled investors at the press conference. And the euro lacks any support. The US dollar will assert strength next week because of the rate hike in the US. So traders are going to sell the euro-dollar pair. There is a mirror level like on the chart for gold, but in the opposite direction. Those who believe in the correlation between these instruments may dislike my video. In fact, there is no correlation. I see a nice target to hunt for. I assume the euro could decline ever deeper. Some traders might enter the market with short positions, however, I would expect a jump, activating sellers' stop orders. Then the price could again reverse downwards. Amid such uncertainty, I wouldn't recommend extending your leveraged positions until next week. The situation is changing all over the world. Anything could happen in the weekend. The pound sterling is getting weaker. It could drop even lower. The pound-dollar pair tested its mirror level. The pair is falling at a faster pace than the euro-dollar pair. Perhaps American traders will buy the pair. We will see. For example, I don't see any trading signals. There was a engulfing yesterday. If the pair closes the week lower, it would bounce on Monday and trigger stop orders at near support and resistance. That's all I wanted to tell you today. A nice weekend is ahead. Probably somebody is going to practice some trading strategy on the simulator platform at the weekend. This is a great solution. See you next week. Bye bye.